Good afternoon, everyone. This is Brad Matheny. Let me get rid of this little thing. And we are live. Another webinar, another day to see what's actually happening. I know that these webinars are building. We're starting to get some traction with followers. Hopefully, we will see a number of people show up today. Big day in the markets, the May 10th through May 20th topping pattern that I had been predicting for the last 45 plus days. Looks like it happened about the 22nd, 23rd, 24th. And kind of interesting, let me come over here and show you guys. Well, before we get into that, let me prepare this. Working on two screens here to try to get everything prepared. So, first things first, I need to do this to make sure this is covered. The disclaimer. Trading is difficult. It is only for people who are capable of handling trading. You are the one that makes all the decisions. I am here showing you what I do, giving you my opinions, and showing you how I analyze the markets. If you are not capable of handling risk or understanding trading or understanding the risks associated with trading, you should be paper trading and watching and not trading real money. Remember, I am here to try to help you. I am showing you what I do. I'm showing you what I see. This is for information purposes only. You are the one that ultimately makes all of the decisions as to what you are going to do, what you're going to buy, what you're going to sell, and how much risk you're going to have. I would urge you to strongly consider risk as a very big component of how you decide to buy or sell or trade anything. If you are new or experienced, there is a risk of loss in trading. You must know what you're doing. Otherwise, you could risk far more than you have in your account. This disclaimer will stay here for a bit. You can pause this right now, exit if you don't understand this, continue if you agree that I am giving you my opinion. This is not trading advice. I am simply here trying to help you understand what is taking place in the US and global markets. Okay, now let's move on to this. If you are a member, you got this last week. This is my SPY cycle patterns going forward into this week. We're now on the 24th here, an inside breakaway. I labeled this as the topping week last Friday. I labeled this as the exhaustion week, meaning that we were likely going to see a lot of volatility and potential price exhaustion this week, which looks like it took place very early with this downside move. And this is the rollover week. This is where I believe we're going to start to see some extended downward trending, potentially trying to break through support. And then we will move into this week, which will be a bit of consolidation slightly before we move forward in the topping cycle phase that I've been predicting for the last 65 plus days. The real setup here is quite interesting in the fact that we've got this massive flagging formation setting up. We're going to be in volatile trending probably for the next 2 weeks, trying to establish the range of this flag and trying to break out, and that we will likely see this move into an extended trend as we go further. Hey, Lawrence, how you doing? Glad you could join us. Well, it looks like it's just you and I right now, trying to get as many people as I can into these things. So feel free to ask your questions, and we'll go from there. Okay, so now what I'm going to do, I've gone through the disclaimer and the setup with the cycle patterns. I'll leave this up. We're going to come back over here to this chart. Little window screen is persistent here. I had posted this up the other day. Someone asked for it, and I had created this, which is a measurement of Fed funds rate with regard to tightness of monetary supply. And it's rather interesting. This is a weekly chart. You can see that we have gone through some extended periods of Fed funds rate tightening. Remember, weekly, we can go back as far as data allows us. So on the Fed funds rate here, we can only go back to 2001, but you can see that we've never been in, and let me get rid of that. Don't want email popping up consistently. You can see that we've never been in this extreme low interest rate environment over extended periods of time. We have been in two modes of extended low interest rate environment, pretty much from the end of beginning of 2009, all the way through, let's call it 2015, 16, into this area where we consolidated. And then we were again super low from the COVID lows all the way through till April, May 2022. What's interesting about this, ladies and gentlemen, is then when we start to move into these rising rate areas, we still do get the opportunity for price advance. So understand here, and let me drag this over here. And so understand, we still do get into this price advance mode. Normally we get a reaction to the downside, and then depending on what's going on in the markets, we might get some sort of an advance here. And I need you to be aware that that's pretty much where we're at in the market. Now, we've got a lot of other factors at play, but you see how we're in this advanced rising Fed funds rate level. Now, this is not just the Fed funds rate. This is another one of my custom indexes. But you notice how we've gone through this rising phase. We got the NASDAQ at the top, the SPY down here. Then, of course, we come back over here. We go through the extreme low interest rates over here. We go through the rising rates back over here. And you can see that throughout this rising rate area, we again go through a period of consolidation, basing, and then we get into a rising type of a moment in the markets. So we are kind of in this mode into the rising moments. Now, this is COVID. Sorry, this is 2018. I thought that was COVID. There's COVID. And you can see we had kind of gotten into this consolidation in 2018. The Fed kind of blipped, lowered rates. And then, of course, we had it lowered even further during COVID. So we have a scenario here where as we're entering into this rising wedge, this rising rates, we may see kind of a rising pattern in the NASDAQ and the SPY going forward. Now you ask yourself, why? Why, Brad, would the US market rise during rising Fed funds rates? Well, it's fairly simple. If you think about it from a standpoint of the amount of money supply that's out on the market, and remember, over the last 12 plus years, hypothetically, the US has created almost $20 trillion in new money. Global central banks throughout the world, including China, have probably added another 10 or 15 trillion on top of that. That does not count the shadow banking system, the derivatives that have all been created by the system. And yes, this creates a lot of risk, but understand that, as I explained it to someone the other day, imagine you had a pool that held 1 billion gallons of water, and you tried to equate that into buckets. You had 100 buckets, and you had to break them out into the 1 billion gallons into 100 buckets. Each bucket would be a certain amount of size, right? Because you're breaking 100 billion gallons into 100 different buckets. So each bucket would be 1 billion each, right? So now imagine that you're breaking the bucket. And now you have a pool that's 45 billion gallons. And you have to break them up into 100 buckets each. Each bucket would be 4.5 billion, if I'm doing the math right. So understand, uh, 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 the concept is that value of money, value of assets, it really changed. We've had a rising rate here. We've got 3 or 4 times the amount of money in the global economy. We are rising these interest rates, meaning that U.S. assets, U.S. Treasuries, U.S. Debt is performing at a much more efficient rate compared to the market and a stagnating market. And global assets are sitting here looking at the world saying, okay, do I invest in Canada? Do I invest in China? Do I invest in Pakistan? Do I invest in Europe? Where do I put my money for the safest, most secure, capable ROI possible? And even though rates are rising and hard assets and soft assets may devalue over the next 3 or 4 years, the reality is that the US is the strongest, most capable planet economy on the planet. It will continue to structure and restructure, trying to find a base and a bottom. But is what is most likely going to happen is that we are going to move through the multiple flagging formations that I highlighted in the video. You can see them here. There's the blue flagging here, followed by the red flagging is the next one way out here, followed by this purple flagging way out here. So we basically have a flag apex here that we're just now reaching. Spread this out, drag this over. We have this apex right here that we're just now breaching. There's the upper area. Here we come with the false breakdown. Maybe we get a little bit of a rally. We'll see. Don't know. But eventually we're going to come back down into this low area right here. Find support here, reestablish this lower channel, move back up into this flagging, which will be right before the election, just a little bit lower than where we're at right now. Okay. And then we're going to probably rally out of that, coming up to this upper channel here in maybe January, February, March 2024, roll back down into this channel here, which will be very, very close to where we're at right now, setting up this final base, which will be right before the elections, right over here. And we will probably rally into that phase as we start getting some clarity with regards to the presidential election. Now, with the NASDAQ, we have a little bit of a broader rotation. So now if you take a look at this rotation here, I'm going to pick from here to here. We got 13.28% to the upside, and that's on the S&P. And in the NASDAQ, we have a 24% rally phase potentially in the NASDAQ. So I'm still holding that my opportunities are that if we get down on the NASDAQ into the, I'm trying to pick an area here, 23,850, or sorry, 12,850 or lower, or on the SPY, if we get below, say, 404, 405 or lower, you've got a very good opportunity to start buying into that low. Now, why? Because I see the base of that move here at roughly 397, 398 on the SPY, and I see the base of the SPY of the NASDAQ at 12,500 to 12,600 potentially over the next 4+ years. I don't see the markets moving too far below these lower channels, which essentially is in this area here, where you see these circles, really more so this yellow line. And I believe that these lows here are going to be holding up quite well going forward as we start to move forward. So this rotation is what I was predicting for my May 10th to May 20th top. Now, the volatility of this apex is not finished yet. We still have another couple of weeks. We could see a big flush out low back down into these areas. We could see it rally back up off of news that the debt ceiling has been resolved. We could see it establish this upper area here. There's absolutely no reason why this couldn't, and I will try to draw this potentially in blue, but there's absolutely no reason why this couldn't come up to this area, come back down to this area, come up to this area, back down to this area, and then move up here. Okay, absolutely no reason why The market could not roll in this manner up to this upper channel. We've almost done the same thing here, but in theory, we could see the same type of momentum carrying up to this area, down here, up here, down here, and then rolling out. So there is no reason, again, why the markets would be incapable of moving like this. And again, particularly in the upward sloping channel here. I've already highlighted that it's very, very common for the markets to be moving into an upward channel in an upward sloping Fed funds rate area. And why? Again, I talked to you about the fact that money always seeks the safest, most secure environment for future ROI. That means that money will move away from hostile environments very quickly into safer, more appropriate environments, trying to prompt some sort of a safety rally. Now, you understand that a safety rally may not be a massive growth phase, which we don't have here. There is not a massive growth phase here. But understand that the US dollar holding up at 102, 103 or higher, even holding up above 97, 98 or higher, while foreign currencies may fall 10, 15, 20% because of excessive risk factors and unknowns, you have essentially the dollar moving 3 or 4 or 4.5%, holding up against something that's moving 10, 12, 15% or more, while US assets are continuing to produce maybe 2.5 to 4.5% return on investment with dividends over the next 3 or 4 years. So you start to see a big difference, especially when you consider the fact that a lot of these investors are actually looking on and putting their money into short-term debt. So, for example, 1 year, 3 years, 6 month debt instruments, trying to get the 6, 7, 8% that everyone's talking about with regards to the U.S. debt market. So there's a big difference in what's actually taking place right now. You have to understand that, the fountain of ROI, safety and returns right now has shifted away from foreign markets, away from China, away from Asia, and away from Europe. And it's really focused back on the US dollar based assets and undervalued equities. Now, I did comment about this. I'm going to come over here to my other chart here, gold. And I did make a comment just the other day about this, how I believe TNA is poised for a big move. So we have seen historically, we have seen lower levels way back here in 11, 12, 13. But I mean, I'm looking at TNA and I'm seeing this type of a basing structure right in here. You can see these multiple lows here, 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 and back over here as a very solid base. And the only times that we've been through this base and below this base, 2016 during the presidential election cycle, COVID collapse, and then the pre 2008, 9, 10, you can see back here, it's the beginning of data. This is when it first started in the collapse of 2009, and we rallied back out. I believe we could be looking at, and this is essentially the small caps and the mid caps market. I believe this undervalued move right now in TNA and the mid caps and the small caps could produce a move easily back up into this $45 to $55 area. I believe that you've got a real solid undervalued basing and bottoming that's taking place here. And this is something I think that has been sufficiently basing and bottoming for quite a while. Okay, now I do also believe that at some point you have to watch this marijuana sector. This thing has just been beaten all to hell. There is no impetus for this to move. but I'm going to tell you right now that this is going to be it could become kind of like those meme stocks or those AMC stocks, in the sense that you're getting very solid basing, very solid consolidation on this weekly chart down here around 350, 3.25. You could see a decent little pop. I mean, you could see a 200-300% pop in this, up into this $8, $9, $10 area, maybe higher. And there's a ton of sectors that are like this. There are a ton of undervalued sectors. I believe the next big move is going to be in the small caps and the mid caps. That's why I'm pointing to you to TNA right now. I think the next hunt for money, as the large caps have rallied and global assets have rallied, I think you're going to start to see assets move out of the large caps and potentially, the NASDAQ, and start to become safer as we roll out of that. And I think you're going to see capital move into these undervalued assets and you're going to see it shifting like think of them like a tide of hamsters. They're going to all be running out of the profits that they've got in the NASDAQ and in large caps, some of them, and foreign money is going to be potentially moving into these undervalued sectors. I believe that the small caps, the mid caps, the Russell, IWM, all of those. In fact, let's take a look at IWM. IWM is basing here, has not come down like TNA. You've got this good solid basing pattern, consolidation. And again, where's the move? So how far could this go on this move? So hypothetically, about here up to here, maybe about 12, maybe about 19%, I would say safely 11 to 12% right up in this area. And that's assuming that this support level here continues to hold up. You can see the support back over here, back over here. So maybe it's best if I draw it as a box. Pretty much you want to watch this support level hold up going forward. And this gives you an opportunity to reach up into this resistance area back up over here. So there's kind of the target for IWM. Okay, let's go back to gold. Gold is causing a lot of consternation, let's say. People are very confused about what's going on with gold. To me, it makes perfect sense. I've highlighted this before. I'm going to show it to you again right now. I'm going to go all the way back and I will highlight why this is so important. So we reached an area back here in 2003. I'll highlight it real quick. We saw this rally. So you can see we saw this rally off the bottom, came back up. We saw this rally here, then a recovery rally, then a double top right here, then consolidation. Then we moved into a breakout move. So first thing I'm going to do is I'm going to highlight this range. Let's start from here, basically all the way across here, and tell you that this is what I'm calling the setup phase. Now, after the setup phase, we move into a secondary phase right here, which I'm going to call the breakaway phase. And the breakaway phase, or the breakout phase, if we want to call it, is where gold moves into an expansion phase, which is full of head fakes. So now understand that you really have a series of breakout highs here, breakout high back over here, And you have this breakout low back over here, which causes a lot of headache for traders not prepared for the rotation that's taking place here. This is essentially a move from continuation move from here to here that rolls into a extended kind of a flagging formation. So this is really a flag out to here. Try to draw this for you while we get a flag out to here, while we get a consolidation phase across here. And whoops, we get a consolidation phase back into here. So now highlight these a little different. What's really taking place in this environment is almost like a expanding pennant or diamond shaped formation. We get this kind of a rotation, false breakout, rally up, stalling, consolidating into a breakout phase, which then moves us into the expansion phase. Now, the expansion phase really starts to take place right here. And I'm actually going to highlight this. Highlight this up here because the expansion phase really is pretty much this to this. A larger rotation. We get this breakout formation here, moving up to this high, setting up this rotation that occurs in this area here, up, down, consolidation, into that wedging formation. You can see that we build a very solid flagging formation across here. You can see that we build a very solid flagging formation across here. And this is the expansion phase. What happens in the expansion phase is we get trapped into thinking this is the breakout, the move in gold, which it's not. It's the start of. It is essentially the last or near the last consolidation phase. So we're currently in the end of this setup phase right now. We're really down in this area right here. So this next move is going to move us into the breakout phase. We may see something like this, bit of a stalling into 2024, into a rotation after the elections, stalling out in 2025, and then moving into a big breakout phase near the end of 2025, which will start the expansion phase. Now, this starts the next growth phase. Remember, in this area here, we were just starting to see some real growth after 9/11 and in the US housing market, 2002, 3, 4, we were just starting to see some real growth. Then we moved into this area here, which was the credit collapse, the 2008, 9, 10 credit collapse. And after the expansion phase, we move into a very strong expanding phase. You can see all the way up to here until 2011, where we peaked up almost 190 percentage points higher. So we are currently in this setup phase, folks. So let's come back over here and kind of mimic what's going on here. So here's our peak, first peak. Here's our second peak. Here's our consolidation. Now we'll look at this. We're getting into our setup phase. So in reality, we've seen this move. We've seen this rally up. We've come right into this area. Where we're at is that we are going to move into a consolidated period, which is what I've been calling for. We're going to see this consolidate across into this area, break out, move up into the breakaway phase, which will be something like this, expanding into a wedge formation, possibly something like this, possibly, whoops, may have drawn this a little oddly, but I'm still going to run with it, possibly into a downward type of a wedge formation. And then we will get some sort of a breakout, possibly near the end of this breakaway phase. Then we will move up into the expansion phase, which will be even broader. And this could, again, set up a very big expansion phase, kind of like this, which will lead us eventually into the big breakout mode. I've drawn these a little too far out, so let me do this and this. Sorry, guys. Let me try to get these in the right date order for you. I'm going to leave these because I'm going to redraw them. And what we're going to do here is we're going to see this move up into this area, consolidate, move up into this area, consolidate, and then potentially move up into this area. So we are going to have this expansion phase carry from about here to here. This breakout phase carry from about here to here into a potential flagging formation here. So there's about where we're at if I do the math properly and the dates properly. So remember, we have vertical line. We have the presidential election right in here. We have the end of the 2023 Christmas rally potential starting right in this area. July 2023, we have the Christmas rally 2025 happening right around in this area. And this is the election. And this puts us about a year and a half or so after the election. We're going to start to see gold really start to move up for a peak area somewhere, probably, in my opinion, in this 2031 to 33 area, kind of up in this area. Although I do believe, I'm going to warn you right now, I do believe that the peak is going to be well above this 7,500 area. So I do believe this next massive rally is going to carry a huge move up like that, up into the very next parabolic move in gold. We are just going to need to step through the setup phase, the breakout or breakaway phase, and the expansion phase before we see this big rally to the upside. Okay. By the way, any questions? Anyone? Lawrence, you still here? You have any questions yet? Otherwise, I shall keep going. Okay, next, let's take a look at Bitcoin. Last week, I did some analysis for a subscriber. Let me get rid of this. And I indicated Bitcoin was in a downtrend. We have got some real solid downward trending today. This carries back towards my analysis that Bitcoin is more so of a speculative asset than a real store of value. Now, many people can argue with me, and I don't care. If you believe it's a store of value, go ahead and believe. If you don't, then don't. I don't necessarily care. The idea, though, is that Bitcoin becomes a useful tool for speculative hedging related to opportunities and trends. And again, I see assets as wanting to move away from risk in any environment. Doesn't matter if it's cryptos or foreign assets or anything of that nature. What the bottom line is, capital, real capital function is to find the safest, most secure environment for longer term or shorter term growth investment going forward. And in doing so, crypto doesn't fall on my map, or Bitcoin doesn't fall on my map unless you have the risk tolerance to be able to handle that. I believe there's some people that do and some people that don't. Now, the downward move here for crypto is a move, in my opinion, down into good old Windows. I move my laptop around and that thing won't go away. My opinion is it's going to be moving down into this window right here. 25,500 to 24,065 roughly, right into this window right here. These previous highs. Then potentially we could see it attempt to move a bit further down into this zone right here. I'll leave it right there. And that would be 21,800 to 20,600. And again, on the unwinding of assets, the unwinding of what's coming in the future means that Bitcoin, this is a daily chart. So let me go to weekly. And you can see I've already kind of drawn it. There's my target zones right here. This zone. Let me see if I can open this up. Open this up, drag this on out, drag this out. So really where you're at with this, folks, is moving back down into this target zone, potentially finding some support, attempting to rally back up near the end of the year, maybe rolling back down, trying to find some support, and eventually possibly trying to bottom around the 18 to 20,000 area before we see a shift in new cycle trends. And I think that's really what's going to happen with Bitcoin. I don't see any impetus in driving Bitcoin prices through another speculative phase right now. Yes, there's money out there. Yes, there's capital out there, but it's in an unwinding phase. And when we're in an unwinding phase where things are looking and seeking for organic bases, I don't see how this is going to continue to do anything but consolidate back down towards these lower ranges, 19,500 to say 22,000, and then potentially break out after the election, possibly into 2026 before we start to see any really big move. Okay, I just do not see how. I don't see what the impulse is for driving this type of a trend again. What's it going to be? Is it going to be 100x ape images, or is it going to be 2000x Bitcoin projected to go to 27 trillion, or is it going to be what's the hype going to be? This was hype. What's the hype? I mean, people have already seen that, back here, it never made it to a million. It's actually back down in the 16, 17,000 range. What's the hype over the next 2.5, 3 years? We have global contraction, higher interest rates, presidential election cycle, contractionary global economy, consumer stagflation, higher energy costs, higher home costs. You tell me, where's the hype going to be that this is going to go to the moon? I don't see it happening until we enter the next big expansion phase, which is back over here after, say, late 2025, 2026. Then I see we have a really big opportunity for another big expansion phase. And I could be wrong. I mean, Bitcoin could come down to 8, 9, 10,000 or lower. There's no reason saying it can't come back down into these levels. It's just a matter that I don't believe it'll get there simply because I believe that we've already kind of eclipsed this low level as an extreme risk factor for Bitcoin. I don't see, 75. If it gets to 7,500, boy, that's going to be a one hell of an opportunity, in my opinion. But I don't think it's going to get there. I think it's going to get more along the 16, 18,000 mark and go from there. Okay. If you are long Bitcoin and waiting this to go to the moon, you got about 20 to 25% downside risk, maybe 30% downside risk back down into this area, maybe back down into this 12,000 area. So maybe 50% downside risk here. And you've got about a year and a half to 2.5 years to wait before we get into this basing mode. So be aware that, in my opinion, I don't see any spark for a launch until 2025, 2026. And this is going to be after the global markets and the debt crises unwind. And these are going to mostly be foreign debt crises. So be aware. Okay. Lastly, let's move into the SPY. The 410 level this morning. Now on Twitter and in the expert growth area, let me show you the expert growth member page. The expert growth member page is going to be changing again. I've added the recorded webinars, I've added gold and metals, I've added the investor updates, and now I've added the Bitcoin video. I am going to be changing the investor updates. So when investors they're going to get their own hot list now. These are going to be mostly Vanguard weekly hot lists. I'm not going to do a bunch of them. I'm going to do maybe 3 or 4 of them for you to follow, but it's going to help you manage your investment. If you're involved in Vanguard or any of the investment funds, these Vanguard lists will help you because they're basically broken down into U.S., foreign market, debt. I mean, basically, they're going to give you the idea of what's moving and what's not moving, what's going up, what's going down, and what's flat. Okay, so there's going to be new resources specifically for investors here. Otherwise, you can see we started out with just the one menu, the trader menu. Then we broke it out into trader and investor. I did. Then I broke it into trader, investor, and gold. And then because I've got people that are following Bitcoin, I went to trader, investor, gold, and now Bitcoin. So understand that we are getting crazier and crazier with regards to the amount of research that I'm doing every week for you. Next, we're going to add some more hot lists, and these hot lists are going to provide you the ability to really track and monitor your investments over the next couple of weeks. Remember, though, that the custom index analysis, when you come in here to custom index analysis, you have these allocation levels. So understand that not only am I doing videos for you every week, but I'm explaining to you how you want to maintain your allocation levels. So if you have been following me for the past couple of months, you'll know that you should have only been investing about 35% of your equity into stocks, about 25 to 45% into cash, about 25% into metals, and 15% in bonds. This is if you can trade metals. This is if you can trade bonds, so no metals. So ideally, you should have been literally 50 to 65% hedged, if not more, 50 to 80% hedged. And if you were following my research with the videos, when I told you, my advice was for you to start hedging and protecting your assets 3 or 4 weeks ago, meaning you should not be chasing this rally phase in the SPY. This is not the rally that you wanted to buy into. And again, if I come back here to daily, buying back into these lows and buying into these dips was fantastic. But about 3, 4, 5 weeks ago, back over here, I warned you that we were running up near this peak and that we would probably not get above this high. This is continuing to be our ultimate high. And that this back in this area, you wanted to start to pick your targets and pull capital away from these gains, because my expectations, we were going to top in this area. That's what this little thing is right here. This is basically saying May 10th through 20th, we are going to be topping. And sure enough, we came back up on that short squeeze with the flagging formation. Now we've rolled back down. We've reached my 410 level, which is off of this line and this line back over here, the flagging, we're finding some support. I believe what's going to happen, and I will tell you this right now, is that we still have about 10. Let me draw a line because I have to make sure I keep my dates together. We have about to June 15th, right around in there. So roughly right in this area is where I think we're going to continue to range trade. So if I were to tell you where we're going to be, I'm going to tell you that we're going to be in this range more than likely till June 10th or 15th. And then I think we're going to move to the downside. And so I'm going to tell you that I think we could be kind of in this range, bouncing around, consolidating, and then moving back down into this range, setting up our June, our August, September base and bottom, kind of in this area. Follows the same line as my yellow, but I think we're going to be looking at that. This is a flag, as I mentioned to you. I think what we're going to be looking at here is we've established a low. As I'm telling you, that until we get some real news, we're going to be establishing another flag, kind of like this. That's going to be our breakdown flag. So here's our primary flag, this blue. Make this some kind of a brighter color. We got yellow. We got, that might be too light. Yep, that's too light. If I can make it a bright cyan, a little brighter. So here we have our primary flag. We've kind of broken out of that to the upside. Okay, now we're establishing the secondary flag. I think we're going to have this very tight flagging formation after this breaking down. And then eventually we're going to come back down to these areas, these critical low areas here, find a little support, maybe flag out over in this area, and then move back to the downside. This is the next move, folks. This big downward swing from 421 roughly down here to maybe 387, maybe 395. This is the next downward swing. Ideally, we're going to stay above this previous unique low. We're going to break through these lows. We're going to possibly break down through these lows. And this plays a very important role. So this, I'm going to be honest with you, that this 404 level has got to hold over the next, this is daily. So between now and say June 15th, this has got to hold. Otherwise, we could see a much more aggressive downward swing. We need to stay in this flagging formation in order for my rolling pattern to occur efficiently. If we break down below 404 in this area, we're very likely to try to come back down into these areas fairly quickly, maybe even deeper. You know, so that may put the lows of 2020 over here, 2021 at risk. If we break down out of this channel very quickly, we could very easily come down to this low and this low, which is the previous unique low, and may attempt to reset this low here. Now, let me explain to you what that means, okay? So if we fail to consolidate, meaning there is some crisis and we get some big breakdown, then we end up with a potential to move below this 404 level right in here. This is the 404 level. We get below that, then we're going to try to move very aggressively down into this area. And if we get below these critical lows, we're going to possibly attempt to move down to 97% or a potential double bottom down here. Now I'm going to highlight this in a deep dark color because this is a very dangerous breakdown event. This would be some type of a major U.S. failure. This would be, and again, my belief is that we are safely immune from any real catalyst unless it is U.S. centric. So understand that if it's something that is U.S. debt ceiling, U.S. war, you know, who knows? But if it's U.S. based, then we have a very strong chance of attempting to potentially come back down here and retest these lows. This would be a pure double bottoming formation. Okay, so let me come in here. This line, this is being drawn, and try to make it a big bright color. This could be a very solid double bottoming formation right here if we were to get there, or could get a lot lower. But right now, this is the ultimate unique low. This is really the last line of defense we have for this basing bottoming formation that I believe is going to set up. So no US crisis, no banking crisis, no massive financial crisis. Then we move into this flat formation. We stay above these two lows, setting up the next move into the end of the year, which pushes us back up here, August, September, up into these areas, trying to breach this high right here. So understand that that is the presumption of moving into 2020, end of the year 2023, early 2024, back up in this area, 430 to 440 area. If we move into some massive crisis event, then we're going to potentially be sliding much further, much deeper down into this 350, 348 area. I don't believe this is likely to happen. Two reasons why. Okay. Number one, somebody wants to win the election. Okay. And the Fed does not want to create another crisis event. The Fed has essentially planned for everything, in my opinion. The debt ceiling issue is something that's going to be resolved. Somebody's going to blink, or they're going to do a temporary extension where they authorize, 400 billion or something to allow for the next 6 months and let it run until they come up to some conclusion. So that's why this is the most likely outcome right now. This is our outlier, maybe 15, 20% a conclusion right now, where we have some sort of a big crisis event. I see this basically stepping through these flagging formations. Remember, you have, let me get rid of this and get rid of this. You have these flags. You have the blue flags here. You have the red flags here, flagging out to here. And then you have these purple flags flagging out to here. So really, we're going to flag out here. We're going to enter into this red flag range. It could be fairly aggressive, rolling around here. Deeper bases, bottoms around these red areas present buy opportunities. Then we flag out pretty much right where we're at right now. About a year from now, we're going to be right where we're at right now. Okay. Then we're going to see a bit of a rally into 2024, early 2024. Then we're going to flag back out. And again, where are we flagging out? Basing and bottoming about right where we are right now. And then we flag back out over into this area before we start to rally. NASDAQ, same thing. In fact, we're going to be basing and bottoming and flagging out about 8% lower. And even this flagging over here, this basing over here is about 3% lower than where we're at. And then, of course, we get the ultimate flag taking place right back over here, which is at 14,625 roughly, 14,550, let's call it. And this is where we're going to start to see the real big rally to the upside. So, again, thank you guys for joining. Remember, just to make sure, I was reminded by a friend of mine, there is a risk of trading. If you are not prepared for the risks, do not trade. I am giving you information based on my interpretation and opinion. This is for educational use only, to help you make better decisions. Visit Ment.com to learn how I can help you with my research. Remember, I do the research. I show you what my systems are saying, and you guys make all the decisions. I'm not involved in trying to make decisions for you. I'm just sharing what my systems are saying and teaching you how to use them efficiently. Okay, guys, that's it. You're welcome, Lawrence. Write me an email if you have any other questions. And again, I'm trying to get as many people as I can to join. So try to help me get more followers. Appreciate it. Talk to you guys later.